Okay, welcome everyone to part 2, Demo Trading Truths. If you didn't see part 1 of this video, I suggest that you definitely go back and check it out because you want to get the most juice from the squeeze, right? And that's what I promise you. I promise to give you the most juice out of the squeeze. I really like that line. I just heard it the other day and I just said, I'm going to pinch that line. I think it is great. Anyway, hi, I'm Tom Alonji. I'm the CEO of Park Avenue Trading. I want to thank you very much for coming to check out the video. What I'd like you to do is please like and subscribe to my channel. I need subscribers. I need the big thumbs up because the Google algorithm loves it. And please stay with me to the end because what I'm going to do is going to go over some key points here that the pitfalls to demo trading and what I learned training junior traders all those years ago. In the last video, we went over the failure rates of traders. And on average, it's a failure rate of 75%. You won't find really a failure rate of less than 65% in any broker. So I think that the average is around 75% of traders that don't make it. So that's an obstacle that you're up against. And the one way that you can avoid that happening to you is learn that in trading, the test is given way before the lesson. So what you do not learn, what your mistakes are really part of your learning experience in trading. I'm going to show you something here. Here is a journal. Okay, I have hundreds of these, and basically that everything is I log in a journal. So a trade journal is a really important thing for you to have, as well as to write down what's going on, what your trading system is doing, what you're doing, and how you really hate the trade the system's putting on, blah, blah, blah. And at the end, when the trading system's right, you go, oh, I knew it was right all along. But at least you get to put in the book what you really were thinking, and you know that the truth is in this book. Okay, so that's an important point as well that we didn't cover in the first video. In the video, we also went over why it's not a good idea to demo trade. The main reason is that you're teaching your brain that it's okay to not have consequences with things. So in other words, what I'm saying is this. In demo trading, there's no real feeling or emotion tied to the money. And when you have money on the line, your brain chemistry definitely changes. Okay, and with demo account trading, you could do silly things. You're out of the money, and all of a sudden you go, well, I'm going to buy another 10. Okay, then the market drops even further. You go, just buy another 30. And then for some chance move, the market comes back up and goes to your original price, and you sell everything, and you made a tremendous amount of money. But in reality, you never could have done that with your live account, and you never should add to a loser. When a market is not proving you correct, you should never be adding to the trade. Okay, so you just don't do it. That's you're heading for ruin if you do something like that. Okay, so demo trading gives you the ability to not really learn the lessons of trading. Okay. Now, we also said that in the last video that the need to be right for people is extremely important. They have a lot of value invested in their self-knowledge and in education from a higher learning, college or university. Okay. And you do anything to prove themselves correct. So with paper trading, you can cheat to prove yourself correct. Now, if it fails, and it probably will, what do? You just close down the demo account and you open up a new one with absolutely no consequences. So the main points that I'm trying to bring here, we're making a long story, longer, is that with demo trading, if you don't treat it like a real account, you're going to create some really bad habits for yourself. Okay? Now, in this article, I talk about the need to be right, and that trumps the need to learn proper trading philosophies. And I go over in this article, like, let's say as a junior trader, you took over some of my concepts, my systems, and you designed a trading system that suited your personality. You did a tremendous amount of back testing and had a great probability to make 2 times your target for a profit on the year with a 75% expectancy. No, with 75%, you're going to make that 2 times, okay? But you would lose 90% of your trades. Now, in the first video, I want to say, okay, don't fall for the winning 90% where you win 10 pips. That was actually mathematically wrong. I really meant to say win 90 trades, 5 pips, lose 10 trades, 70 pips or something like that. Because really, you'd come up ahead in that first mathematics that I used. But I was just thinking spur of the moment, and that created the error, okay? But anyway, so you would lose 90% of your trades. Now, I know from past experience, most people would not like that, and they couldn't tolerate or accept that type of loss with real funds. They couldn't accept losing 9 times out of 10. They can't. And if you agree, you would really be denying yourself the ability to make good money, because being right is more important to you than being trading successfully. Now, I know that this is going way out of the weeds, off of demo trading, but they're important concepts for you to know, so that when you do start demo trading, you could and you start trying to build a system for yourself. These are important concepts for you, so you can relate back to them and say, yeah, I remember that dude Tom said that, like, you know, I'm gonna have a hard time psychologically with this, so I need to overcome that. That goes back to the first video where we talked about making the unconscious conscious, so that you can actually take those pieces apart that you internalized all those years ago, that are absolutely of no value to you today. Okay? So that was also the reason why go take a personality test, so you know who you are. Okay? Again, really going into the weeds. But so some of you might think that losing 90% rate is impossible to trade Forex successfully. I'm going to tell you it's not. I have traders that I know, not 90%, that are wrong 7 out of 10 times, and very successful traders. And one guy I know that trades MACD, moving average convergence to order, is horrible failure rate. That's why I don't even touch it. I used to dabble with it, but I just couldn't figure out a way to make money with it. But he does. I mean, even a 70% losing rate, you know, he makes money, because he'll lose an average of, 25 pips, and he'll make 160 pips on the wins. 170, sometimes 200 pips on the win. So anyway, but that's what it comes down to. It's how much you win versus how much you lose. But so if you think 90% you can't trade it successfully, you'd be wrong, because it all goes back to the golden rule: cut your losses short and let your profits run. So let's say that 90% of your trades lose money, and your average loss is 25 pips. On the year, you make 100 trades, so you end up losing 90, then that's a total of 2,250 pips. A little bit more with brokerage, okay? But let's forget about the brokerage right now. But if you follow the golden rules and your average winning trade is an R multiple of 18, in other words, you're risking 25, but you're making 18 times that. That's what an R multiple is. And I talk about that in the money management video, so please go back and check that one out. For a total of 450 pips for 10 trades, you end up making 4,500 pips on the winners and 2,250 pips on the losers. You end up with 2,250 pips, even though 90% of your trades were losers. So it goes to the golden rule. Now, people would choose a 90% win rate to death. So here's where the guru fanboys get hoodwinked. This is the people that fall for that robot or that AI or whatever, I don't even know what's out there. There's so much shitty bullshit out there. It's ridiculous. Okay, it's ridiculous. I'm telling you right now, what your mother told you and your dad told you was absolutely true. If it sounds too good to be true, it is. It is. Don't fall for it. Okay? They believe a 90% win rate, just as those people that want to learn a foreign language in 30 days when you have absolutely no previous knowledge of Swahili. You want to learn Swahili? And then you see the advertisement, learn Swahili in 30 days, you'll be speaking fluently. Bull. Okay? Some gurus profess an even greater than 90% win rate. And the general unsuspecting public eats up their $99 trading robot to the tune of hundreds of thousands of dollars for the marketer / trader. He's a marketer. He's selling shit, So if we took 100 trades, suppose you got to be right 90% of the time, as the guru robot says you would. Suppose your average win rate is 25 pips. Your average loss is 75. That means you'd have a total of 2,500 pips in winning, a little bit less because of brokerage, and 6,300 pips, 2,500 pips in winning, yeah, a little bit less, okay, and 6,300 pips in losses, a little bit more because of brokerage. So a total loss of 3,800 pips. Would people trade the system? Yes, they would. Because I have seen Forex traders use something similar to this, but not understand the golden rule, and continue and use it until they went bankrupt. Why? Because it feels damn effing good to be right most of the time. It's very rewarding. Still feel like you think I'm exaggerating about this. Well, I already showed you in video 1 the broker websites. I'm going to tell you something else. There was a study done by a major Forex broker. The broker had over 35,000 people that traded FX daily. Trades were analyzed over a 12-month period, and the number was staggering, okay? Those 35,000 people executed 60 million Forex trades. About 61.5% of the trades were a profitable endeavor. That's a little over 6 out of 10. It's an excellent money-making proposition. But here's the sharp stick in the eye. The inability to follow the golden rule of trading. You see, those 35,000 trading platform accounts, on average, won 48 pips. When they lost 83 pips. So you can see having a very high win rate means absolutely nothing. You have to focus on running the profits and cutting the losses. So, we're coming to the end of the demo trading truths. We understand, or you should understand, why demo trading isn't such a great idea. Okay? But if you do me a favor, if you do yourself a favor, and you approach your demo account and you write down, this is my real account. So if you're going to start off trading with $10,000, you open up a $10,000 demo trading account. Okay? You don't open up a $100,000 demo trading account. You don't open up $200,000. You open up a $10,000 demo trading account. And you say to yourself, this is my money. This is real. And you see, your subconscious mind has no real understanding what's real and what's not real. If you hammer it home and tell your brain to say that this is real, this is my money, this is the money I saved to trade with, then you will actually feel the wins and losses. And then what you're doing with your demo account won't be that detrimental to your real account, because you're doing everything that you should be doing. You must follow your trading rules. Okay. Now, the second part of this thing or another important point is, which I said in the first video, and I'm going to reiterate in this video, is learn from somebody else's mistakes. It's always best to learn from other people's mistakes. You need to get an education, okay? And what's this? And frankly, we don't want to spend that time. I don't know what that's about, but I don't know where that came from. I just don't pay attention to that. I don't know where that is, but anyway, you need to follow somebody. You need to get a mentor. I'm telling you, I'm not saying this just to, oh, this guy's trying to sell me something. I'm trying to build a trading room of like-minded individuals. I enjoyed my trading room at CRT Bank. I have nobody really to hang out with in my older days. So yes, I am. I'm actually trying to become your mentor, and I'm hoping that I can offer you some really good advice. I know that if you were to take my trading courses, and if you were to join Park Avenue Trading, the trading room, I could offer you some great value. I guarantee it. And, it's all with money back guarantees. And this is not a sales pitch. So let me go on to the part where we open up a demo account and we make some trades. So hang on one second and let's do it. Okay, so here is your MT4 platform. It's very, very it's very, very user friendly, right? And if I was going to use this, let's say for instance, sterling yen, for instance. Okay, I would click on sterling yen and the order block would come up, and the volume is going to be the amount that you're trading. So one is one contract. Okay, that's 100,000 sterling versus the yen. 2 is 2, 3, 4, 5, up to 800,000. Now, if you wanted to go higher than 800,000, you have to put in 10. That's actually 1 million sterling versus the Japanese yen, or 1 million pounds versus the Japanese yen. There are a couple of types of market. You could do a market order, whereas bang, you could boom, buy it. Boom. As soon as we buy it, the marketplace actually, oh shoot, I should have showed that 10. Okay, 1 million sterling was bought against the Japanese yen. And I don't, it's here's a demo account. I really don't care. But in reality, what I'd be doing with an order first of all, if I'm going to talk about trading itself, all right, I'd be employing some Tau of price principles or Forex confidant principles, and things that type of analysis for myself. But with this trading platform, okay, you can, actually view all your different indicators, or insert all your different indicators. You got as many indicators as you need, really, custom indicators. Look at all these indicators. Okay, that's another thing. Don't get so caught up on the indicators. Okay, learn price action. Price action trading is by far the best trading. Okay, before I go over to the trading room, I think it's important that I go over with you a couple of different types of orders. Okay, and let's go to dollar Swiss, for instance. Okay, your order box is going to come up. All right, you always check your volume. All right, now I set that from the last trade for 1 million sterling yen, which actually would have been making some money right now. But check your volume to make sure that, like, if you're only going to do a half 50,000, right, it's going to be 0.5, right? That's 50,000. But let's say, for instance, there's different types of market orders. Okay, this market execution means that's now. It's happening right now, live price. Market's going to execute it. So you're going to hit the bid, sell, you're going to take the offer, and you're going to buy. Okay, you have pending orders. Okay, where you have a buy. Let's go buy, stop. Okay, what a buy stop is, you want to buy something, it's at a higher price. Okay, so you place the buy stop, it has to be at a higher price than what the market price is right now. Okay, you have a buy limit. Okay, a buy limit is downside. Okay, so you're looking to buy something that's worth, you want to buy it lower. So you put a buy limit in. Okay, the reason why you do this is, like, say for instance, instead of running a stop loss, it's kind of like, you're going to sleep, you have a point of interest that let's just use, you know what, let's close this guy down. Let's use sterling yen, since the chart's up. It's just going to be easier to deal with. I don't know who that could be calling me at this hour, but let's go sterling yen. Okay, we click on sterling yen like that, and we check the volume first, all right, and then let's say, for instance, we want to buy the market a pending order. We want to buy stop, okay, which is we want to buy something upside. We're going to basically place the price, okay, at 183, say 56. Okay, you put your stop loss in. If it's done, you go, okay, 183.23, and then kablammo, you paste the order. Okay, so it's going to buy if it goes up here, and if you do get executed, it's going to sell if it goes down there. All right, so the next type of order is going to be we go to pending order. Okay, so we did the buy stop upside. We're going to do the buy limit downside. So in other words, this is, you want to place the order for a price that is less than, what the market is doing. So you want to buy 183 even, okay, and you're going to put a stop loss in. Okay, so your stop loss would be, if you're buying it here, again, you have to put the stop loss, you want it at 182, I don't know, 89, something like that. Okay, 0. All right, so then you would place that order. Okay, boom. Now those two orders are in the marketplace. I will, of course, it's a demo account, so I'm not really worried about it, but I wouldn't do this if it was my real account. I'm just showing you how this stuff works, and I would immediately cancel it, but I'm not really too concerned with it. Okay, so there goes that mentality with a demo account I've been talking about, that it's not real, so you don't really care. So now there's another type of order, right? Pending order. There is a sell limit. That's basically, you want to sell something that's higher than it is right now. Okay, so I could actually go and have a buy limit here. I could place a sell. I have a buy limit right here. Okay, at what's the price here? I don't know, what was it? 183.56 or something like that. A buy stop. Sorry, here, buy stop. Right up here. I guess it's 183.56. Okay, I could put a sell limit. Sell 0.5 at 183.96, to go against this order. I wouldn't do that, but I'll just show you that you can do it. Okay, then you have also a sell stop. A sell stop is something that's lower. You want to sell it at a lower price. Okay, so there's your 4 types of orders. And you just need to get them down a little bit. Buy stop is upside. Buy limit is downside. Sell stop is downside. Buy limit is upside. And that's it. All right. Now let me do some really bad self-promotion, and I'll show you inside the trading rooms. So hang on one second. Okay, so this is one of the 2 rooms that, if you were part of Park Avenue Trading, that you'd have access to. And this is basically the Park Avenue Trading technical and mindset analysis. This is like where I go over technicals, and also we talk about trading philosophies and mindset. And for me, it's very, very important to have a good good grasp on trader psychology and trader philosophy. Okay. Um, in here, I basically, write down. We talk about ideas. Now, you are fine to. This is the area that you would actually get to talk with other members and talk about, Tau of Price, talk about Forex Confidant. I would come in and give lessons here. Since this is a new room, there are only, I believe, there's only 7 members in this, and these members basically are beta testers. Okay, they've been with me for a couple of years now. They were in the other rooms, and basically their job is to, well, take trades if they want, and really their job is for proof that everything that I'm saying is actually, I'm held accountable. It's true. Okay, last actually technical analysis I gave here was sterling yen minus support coming in at 181.73. If I can get a dip back down to 180.185 level, we'll look to buy some or scoop some with a stop loss at 181.65-ish. Okay, this was based off of Genesis. There are three different trading systems being deployed in Park Avenue Trading. Genesis is a system that I do not teach. It's proprietary. I do teach Tau of Price and I teach Forex Confidant, but Genesis, I give out the levels and I also say what I'm going to do. Now, a lot of times Genesis levels are going to fall with Tau of Price levels. And they're also going to be, like, if I'm looking to sell something, Genesis is telling me, there's a sell level at 149.99. Okay, just making something up. A lot of times a Forex Confidant resistance line might be up there as well. Trend line resistance would be up there. So a lot of times these things kind of harmoniously just fit together. But there is also the second room, which is Park Avenue Trading Floor. Okay, and this is basically where I call the trades. So if you look at the last signal that I gave, because I've been doing these videos and they've been really taking up my time, and I got to write these things. I think about what I want to say. It's really. Hopefully I got enough content or the ability to do this much faster, because I'm not really good at it. And to be completely candid, I really don't like talking about like plain vanilla things like how to open up a demo account. It's I don't like talking about it, but I try to give as much value with it as I can. So anyway, if you look here, I got long sterling yen at 181.785. Stop loss 181.485. This was based off of the last thing that I said right here, minus support coming in at 181.73. So the technical and mindset analysis group, I put this here, okay? And then, here's the trading floor. Here's the trade execution. Now look, this was done at 8:26 in the morning. I gave the alert out at 7:59. A half hour before, I alerted my traders that, look, that's where the support is. That's what I would be doing. Okay. Now, I bought it. Okay. Stop loss. Once the market started moving now I quickly took off 1/3 at 181.90. That was a mistake. But I'm always looking to protect your capital. So if you would have taken this trade, I'd be looking to try to get you away from the fire. So as soon as we went up some pips, I took some profits at 180, 190. It's not great, but it lowered. It got me away from the fire. So I immediately put the stop loss to average. Okay. Market went up to an 82.14 paid. So in other words, it was like 13.14. 14 was paid. 14 bid for a second at that time. And I said, okay, we got 1 hour gain at AON, means as of now. All right. Market was trading tight between the figure and 14 figure. Now, it could not break 15 earlier. So I basically pulled off another 1/3 of the trade at 12, and I put the stop loss to entry. And I ended up squaring the trade at 182.23. It turned into a 1.35 R gain. So in other words, my original risk plus a little bit more I gained on the trade. Now, in hindsight, that buy, I think, was the lowest point since Friday. It is now trading at 183. So now I had a buy signal in it again earlier today at 182.25, but I was writing an article. And that's no excuse. I mean, I could have came in here and did it, but, you know, I just didn't. But anyway, so here you have the two trading rooms, okay? I'm going to be completely candid with you. The accuracy rate for the last 2 years has been around 83%. Now, that's not to say that it's going to stay at 83%, but that's what it's been. And I really look forward to, like, I really look forward to 300 people being in here. I really do. I want a vibrant room where people are basically chatting back and forth, using the principles, making money, you know, controlling losses, and basically moving their account forward. Okay, that's what I really look for. So I hope that this video helped you. Please don't mind the self-promotion, but it is what it is. Capitalist pig. Okay. And what I ask you to do is go over to parkavenuetrading.com, get yourself a free ebook, 3 Steps to Avoid False Breakouts. It's a great little technical indicator book. Also, you know, subscribe to the email list. Maybe even buy a course. Maybe even join the trading room straight up. I look to see you on the profitable side. Cheers.